say for example, high school kids, right? They want to accumulate certain hours, number of hours to apply for the college, right? There's no age limitation. You can have like a 16 years old high school student join your non-profit organization. Yes, as a volunteer, even as a board member. As a board member, coming as a volunteer, and you can issue the hours. Your family foundation can issue the certificate to say this person contributes certain hours for the community service. But this is another purposes, but again, my topic is not focused on the charitable. It's more like how to relate it to a business. Yes.
And the family foundation do more invest.
Yes, family foundation can do the investment. Yes, of course. Invest usually mean a mutual fund. Usually means stock. Yeah. Family foundation or any other tax exempt organization is highly encouraged to do the investment. That's the purpose. One of the purpose for this entity, because the capital gain create their tax free.
And invest to other companies such as a corporation
cannot.
Cannot.
Only what this is a very gray area, right? If you just only passively just own the stock, is okay, no problem. Because you don't involve any operation. If you involve operation, then that portion may subject to tax. Just be careful. For example, let me just give you one example. For a church, okay, usually church qualify as a tax exempt organization, usually. However, if your church operate daycare school, operate any school, unless this school qualify individually as tax exempt, otherwise this school may be treated as for profit. Same thing if your church running bookstore, right? Bookstore. Maybe this bookstore will be subject to for profit tax. So for your question is very blurred, depends on how do you involve your investment. If you just very passive, I just own the stock, I just enjoy the dividend, I just enjoy the capital gain, and no problem, tax free. However, you actively involve operation and be careful. Okay.
Yeah, question is, if one family, the regular income is 150K, and another person to broker, he make 100K this year. So how much money he can transfer for the?
Okay, if we talk about 250, this figure,
yeah,
this is big enough. Okay, but that number is very popular in Silicon Valley.
Yeah.
All right. Usually, again, the limit is 20%. So I do not expect you to donate everything there. So 250, 20% is $50,000 already. I just cannot imagine people will transfer like $50,000. Oh, by the way, if you really consider transfer for money and then tax free, the first one is 401k.
Yes,
retirement plan. However, the limitation is too low, right? So for this kind of family, they maybe lose, because for 401k they have a phase out. Once your income higher, you cannot transfer money, right? So if you, for the people lose the retirement plan, then consider family foundation.
So you mean 20% is from the Scale C side?
No, AGI. AGI means is on the first page. We're going to talk about what's AGI. AGI is on the first page, 1040. You have a gross income, and you deduct adjustment, right? So many adjustment,
okay.
right?
Yeah.
You deduct adjustment. So 250, you deduct so many adjustment, probably 200, and the 5% of 200 is $10,000.
Can
Yes.
we invest in the real estate?
Yes, foundation, of course, highly encouraged to invest in the appreciable area, especially Bay Area. If you invest property is depreciate, there's no any purposes for that. However, for any foundation or tax exempt organization to own real estate property, a lot of benefit, even property tax exempt. How powerful it is. Exempt property tax.
Is there any regulation for the use of the property?
No, you can rent it out. You can rent it out. Okay, you can rent it out. So a lot of business, but again, people may be very hesitant, right? Because once you transfer the real property to a foundation, you cannot get it out. You cannot take it back. You will become the property assets under the foundation. Of course, you can manage it. However, there's a lot of limitation you personally.
What about the foundation under your name?
But still, you cannot take it back. Even under your name, this foundation is under your name, but you and this foundation totally separate. So even though so many tax benefit for tax exempt, but people always hesitate to transfer the real property to foundation, because once you transfer it, you cannot take it back. I can only take one more question. Yes.
Still the
You
organization
said
owns
every year should
then transfer
donate
to next generation.
5%.
No. Let me put it this way.
It's been a board member
Because
or
non-profit.
Let me put it this way. Let me correct myself or clarify. Okay. If you are the founder of the family foundation, if you are the founder, you don't have obligation to donate every year. If this year I don't have too much income, I donate nothing. I don't need to donate anything. However, for the foundation side, it must spend 5% of your assets.
Every year.
Yeah, you mean outcome. You mean cash out. You must, probably for this year you receive nothing. However, by law, you still need to spend 5% of your total assets. And this 5% including administration really mean the money returned back to the founder.
Well, for example, it's like I donated 50,000 to the foundation.
Right.
I buy real estate.
You still need to spend 5% value.
But
So even it's real estate, you need to come out with 5% donation anyway.
it's no cash there.
Well, if this real estate, you may have a rental income.
Oh.
Right? Doesn't matter.
Have to be in cash.
Oh, how can you donate 5% of your real estate? Probably you can donate 5% to have somebody at the title. I just cannot imagine that.
Mutual fund.
Yeah.
You can hold some mutual fund.
Well, you need to spend 5%. Doesn't matter how can you configure it. You know. So as long as you can work it out, I think IRS does not. But remember, okay, 5% including administration. That means including yourself, right? And also including any other 501c3 organization.
501c2.
501c3.